Have you ever heard an investor say, I'd love to put money into the market right now, but it is red hot. I'm very uncomfortable. I'd rather wait until we get a little bit of a pullback and then I can find that perfect entry point to invest my money. Okay, maybe that does sound reasonable, but let's look at the data over the last 10 years and see if that makes sense or if they would have just been better at the beginning of the period, investing their money, walking away, and letting it grow. In front of us, we have the U.S. stock index returns from roughly 2016 until 2025. We're going to start in 2016, and I have this little red mark for our starting point. And let's say you're pretty good at your timing. You're waiting for a meaningful pullback. And let's fast forward to right here in 2019 at this low. Okay, so let's say you enter right here. And let's move a line laterally across. This is showing us that at this low, the S&P would have lost maybe a year and a half roughly of gains. So in your mind, you're killing it. I picked the low. However, we're going to make a green line and we're going to show the overall trend from 2016 to that low in 2019. And look at this. The trend is still upward. So even though you were right about your entry point, you didn't make as much had you just invested at the beginning of the period and let everything ride. Let's look at another point of entry. Let's say you were even better. You picked the low in March of 2020 right here. Chaos in the markets. And so let's move our line over. And it looks like it's bringing us back somewhere in the early to mid 2017 period. So you're killing it. However, let's look at our trend line again. Even though you were really right and you timed it perfectly, you still would have made more money had you just started at the beginning of the period and moved forward from there. Let's look at one final example here. We're going to say you picked this period right here, looking like the end of 2022, the S&P had a bad year, and we're going to move this line across. So right here, okay, you made up for looks like almost 2 years about, and then we'll look at our trend line again, and here we are. And so even though that happened, you still would have been much better investing at the beginning. Your waiting essentially cost you a significant amount of returns. It looks like you're right here, but there's a cost to being right. And that cost is that you made less money than you would have had you just invested at the beginning of the time. The overarching issue with waiting for a pullback to happen is there's a lot of variables that are working and it's really tough to time everything correctly. So when you're waiting for that pullback, in our example, you missed out on all those years of positive growth, even though you found a couple short-term wins and you were right. And that's what I always say is it more important to be right or is it more important to make money? Another issue that could arise is how long do you wait to make a decision on your pullback? How large of a pullback, right? What is that magnitude of a downward trend that you require to get back in? Every decision you make just makes it more difficult to come back in. The more variables you add, the harder it is to make a decision of when to invest. The people that say, I want a pullback, right, to get into the market are the same people that say, the market's doing terribly right now. I want to wait for it to do better before I get back in. But in the same situation, they probably lose a lot of money waiting for it to do better because they missed out on that ride up the hill. They could have stayed in it, suffered the pullback, but also reaped the rewards of the gains over time. What I've said again, and I'll say in the future, time in the market beats timing the market over the long term. Thanks for listening. Have a great day.